Yes, good morning once again, and welcome to the last class for this May 2025 Diet Revision class. And I trust God that this will be the last for PM and for every other courses you have in skills, for those of us writing everything, but will not have course to come back again to rewrite this course. Yes.
Amen. Amen.
So at the end of the class, we'll give various tips on what we need to do. It's one thing to study, and it's one thing to get set for the exams. Yes, you can actually study. Onabanjo, I actually make you a co-host, but you're trying to disturb this class. Let me let me remove you as a co-host. So it's one thing to actually prepare for the exams, and it's another thing to get to the hall and don't know what to do. So we just after this class, we'll just encourage ourselves and see how we come out with flying colors in the course of this exam. So talking about cost volume profit analysis, it's a topic that can be tested in different ways, in different approach. There are various ways questions have been tested on it. But once you know the guiding guide and principles, you will not have you will not be thrown off balance in the exam hall. So the cost volume profit analysis, which is in short form referred to as CVP analysis, is is a measure used to see how changes in costs, sales volume, and price affect an organization profit. So cost volume profit analysis is otherwise referred to as break-even um, analysis. Break-even analysis. So this is an attempt to see the effect of fixed cost, variable cost, sales price, quantity, and mix on profits. On profit. So the break-even point is the level of activity at which there is neither profit nor loss. From the elementary economics, you understand that break-even point is a point where two lines intersect in demand and supply, the point where demand equals supply. So also in terms of cost analysis, break-even point is a point where there is neither profit nor loss. Is a point where there is neither profit nor loss. So at break-even level, profit or loss equal to zero. Profit or loss equal to zero at break-even level. So it means that if profit or loss is equal to zero at break-even level, what is profit? Profit, please put down everything I'll be showing you. Profit is equal to what? Sales less total cost. Sales less total cost. Sales less total cost. In other way, where your sales can be termed as revenue, that is total revenue, the point, let me put it this way, the point where total revenue, where total revenue equal total cost. equal total cost is the break-even point. Is the break-even point. So when you talk about that, it means that when total revenue, when total revenue less total cost and you have zero, it means this is break-even point. It is a point where you neither make profit nor loss. And we've established that sales minus total cost, which can otherwise be referred to as revenue, is profit. So where total revenue minus total cost is zero, it means profit is also zero, and there is also no loss. So at break-even point, at break-even point, at break-even point, profits or loss equal to zero. Break-even points, profit or loss equal to zero. So the break-even point computation is very important because it helps you as an organization to determine your set targets in terms of sales. For you to achieve a stipulated profit, you can set a target in relation to sales, and it can help in guiding your pricing decision. How much should I fix per unit to be able to achieve a target profit? So the break-even points or the break-even analysis shows the impact of cost changes on profitability. As cost changes, what are the elements of the cost? Variable costs, the total cost. As they changes, what are their effects on the overall profit of the organization? So there are different ways you can actually solve for CVP, but the most popular approach is using the formula method, which is otherwise termed as the algebraic method. Now, I will quickly show the various terms that is involved in solving break-even analysis question, which I believe at this point most of us should be used to that. And number one, we have contribution. You must be able to determine your contribution. Contribution is what? Is sales less variable cost. Sales less variable cost. So also, most students oftentimes confuse contribution with contribution margin per unit. And they also confuse contribution margin per unit with contribution margin ratio. Yes, most times you see students asking, when should I use contribution margin? When should I use contribution margin ratio? So this is it. So contribution margin per unit. Contribution margin per unit, which can be shortened as, because in some questions you just see CM, is what? It's selling price per unit. Let me make it clear. Selling price per unit. Selling price per unit less unit variable cost. Take note of the common terms there. Unit variable cost. you need variable costs. So let me put my phone on do not disturb. So this is contribution margin per unit. In simple terms, it can be expressed as CM equal to what? Selling price less variable costs per unit. So also we have contribution margin ratio. Contribution margin ratio. It is what? It can be in simple terms be expressed as CMR. So we have it, or sometimes it can be termed as, let me say, or because in the question they might not give you a popular term that you know. It can be termed as profit volume ratio. Profit volume ratio. That is PV ratio. So, or in simple term, it can be contribution to sales ratio. Please, if you are writing, you can put that in full. Some people will still come and ask me, what is that expression? Please, contribution to sales ratio. So, for you to determine this, it will be contribution divided by sales. Solution. Then, when it comes to contribution margin ratio, you have sales as the denominator. Now, this is when you want to determine, you are trying to apply the total sales. The total sales, you use contribution margin ratio. But when you are trying to determine your break even based on units, you use this. Per unit, you use this. When you're trying to work based on total, you use your contribution margin ratio. Your contribution margin ratio. Now, we also have what we call margin of safety. Margin of safety. Margin of safety. The margin of safety is the difference between your budgeted sales and your break-even point. It means it is the point that shows, it is a risk indicator. The margin of safety. It is a point whereby when you go beyond certain level of sales, you might begin to experience loss. So margin of safety shows the risk that lies ahead. It means that a higher margin of safety means lower risk of losses. When you compute and you have higher margin of safety, it means there is lower risk of losses. But when you have lower margin of safety, it means there is high risk of losses in future. So it's a pointer to tell you how to redress your decision. Now, it is very useful, that is a margin of safety, in assessing how price, cost changes, or sales volume changes. So it can help you to quickly avert an unfavorable economic downturn or a competitive pressure from others in that your same business line. So the margin of safety is a pointer to a risk that lies ahead, or is a pointer here, there's safety ahead and there's no risk. So how do you compute that? It is simply margin of safety is budgeted sales less break even points. Break even points. That is margin of safety. Budgeted sales less break even points. Now, also, we have margin of safety ratio. Margin of safety ratio. Margin of safety ratio. And this is budgeted sales less break even points. Let's break even points divide by break even sales. Divide by break even sales. And you multiply by 100 over 1. This is margin of safety ratio. Margin of safety ratio. So there is something else again. The break even points. The break even points. The break even points. Okay. The break even points, everybody should know that break even point in units, because you can be asked to calculate break even points in terms of sales revenue. Break even point in units. The formula is what? Fixed costs. Fixed costs divide by what? Contribution margin. Just contribution margin now, not contribution margin ratio. So also, you can be asked to calculate break even point of sales revenue. So selling price is for a unit, while sales revenue is for the overall sales. So we can compute break even points of sales revenue. Break even point of sales revenue. And this will be what? This will be fixed cost divided by what? Contribution margin ratio. You can see the difference now. Contribution margin ratio, because we are looking at break even point based on sales, not based on units. So the contribution margin ratio is what? Is contribution divided by sales. Contribution divided by sales. So also, you can be asked to calculate number of units to achieve a target profit. Number of units to achieve a target profit. For you to do that, it will be your fixed cost plus what? Plus that target profit. It might be given in the question. Plus target profit divide by what? Divide by contribution margin ratio, CMR. Divide by contribution margin ratio. So that is for number of units to achieve a target profit. And also, you can be asked to calculate value of cells, not unit now, value of cells, value of cells to achieve a target or a targeted profit. A targeted profit. What will you do at this point? The formula is what? It will be, okay, sorry, this one should be CM, contribution margin, while this will be fixed cost, fixed cost plus targeted profit plus targeted profit. We divide everything by contribution margin ratio. Divide all by contribution. Let me write it to all. Some persons might just think we are dividing only targeted profits. Since it's based on cell, we're using CMR. If it is based on unit, you just use CM. Now, you can be asked to compute number of units to achieve the profit after tax. Number of units to achieve the profits. The profits after tax. So how do you go about this now? Still a formula. Because of time, I'm supposed to use my formula tools, but let me see if I can apply that. Let me see if I can use that without much delay. Don't be scared. I'm not using the formulas you're seeing on my screen. I just want to adopt that so we can have fixed costs plus profit after tax divided by 1 minus tax rate. 1 minus tax rate divided by contribution margin. I believe you know what CM is. It's contribution margin. Contribution margin. So that is for that. So now we can also compute value of cells to achieve the profit after tax. Value of cells to achieve the profit after tax. So it's just to use CMR and not CM. Value of cells to achieve the profit after tax. Formula will be what? It will still be this, but the denominator will change. So instead of CM, it will be CMR, which is contribution margin ratio. Somebody will ask, what is the difference? I've highlighted the difference over time that when you are computing based on total sales, you use contribution margin ratio. When you're computing based on units, you use contribution margin. You use contribution margin. Now, these are basic formulas when the question does not involve mix, when the question does not involve multiple products. You know, some organization sells two or more products, and in their sales value, in their overall sales, the sales value can comprise of the sales of product A and product B. It means the sales revenue have a mix because when company XYZ is producing product ABC, their total revenue will be a mix of product A, B, C. So when we have multi-products, what do we do? When we have multiple products, how do we solve? In a question can be informed that company A produces toy, produces wristwatch, produces this and that. And now you can be asked to determine the contribution margin for each product. You can be asked to determine the weighted contribution margin ratio. You can be asked to determine the overall break-even point in sales value. How do you approach such question? Let's show the formulas. When you have multiple products in the normal Apex class, I solved the question that involve multiple products. In case you not have access to that class, you can do well to watch the videos again. The question is also a very good example of multi-product CVP analysis. So some companies sells two or more products. So a business is said to break even where revenue equals to costs. So to show break-even analysis for multiple products, we can have a scenario where the sales mix is given. And we can also have a scenario where the sales mix is not given. So in a question, you can see that they can state that product B will be 80% of the sales revenue. It shows that product A will be 20%. That is the mix. So sales mix can be given either in percentage, in decimal, in fraction, and it can also be given either as a whole number. That is sales mix. And where it is not given, you'll be expected to compute for it. So in a question also, the issue of fixed costs can be a confusion. Product A can have its own fixed overhead. Product B can also has its own fixed overhead. You will now be faced with the question, how do I treat this? Now, the point is this. You add the fixed overhead together to determine the overall break-even point of the organization. So where fixed costs are given for the entire product, you use that fixed cost. Where fixed costs are not given for the entire product, you add the fixed cost for the entire product and you work to determine your break-even sales. So let's show some little things we need to know. Determination. Determination of contribution contribution margin for each product You must definitely do this for every question, either multi product CVP or a single product. So you have to determine the contribution margin for each of the products. And we've stated that contribution margin is what? Contribution margin is what? Is selling price less unit variable cost. Selling price less unit variable cost. So also, you might also need to determine the weighted contribution margin ratio. Weighted. We talk about weight, your mind should go to ratio. Weighted. Weighted contribution margin ratio. The weighted contribution margin ratio weighted contribution weighted contribution margin ratio. This will be what? It will be weighted contribution margin. It means when you determine the contribution for each product, the results, the ratio of those two results, then you look for the fraction. So weighted contribution, we'll see such scenarios in the examples, in the questions we're going to solve. One of the questions we are going to solve. So it will be weighted contribution margin divided by what? Weighted selling price. The selling price, the weight of the selling price. The weighted selling price. So also, how do you determine weighted contribution margin? That is the question. How do I determine weighted contribution margin? Weighted contribution margin. How do I determine weighted contribution margin? It will be my sales mix. That is my sales in units. If I'm working based on unit, my sales mix in unit. When we talk about sales mix in unit, what is the quantity of product A? What is the quantity of product B? The ratio. Then you look for the weight. That is sales. Take note of this formula, please. Sales mix multiplied by contribution margin. You check most of the question, this is what is applicable. Sales mix multiplied by contribution margin. That is how to get your weighted contribution margin. Your weighted contribution margin. Now, your weighted selling price. How do you determine that? Weighted. Weighted selling price. How do you determine that? It is sales mix multiplied by selling price. Sales mix multiplied by selling price. Let's put this in red. Sales mix multiplied by selling price. So also, for you to determine the overall break-even points, overall break-even point in sales value. In sales value is different from in units. In sales value, what do? It will be what? It will be total fixed cost divided by weighted contribution margin ratio. See, total fixed cost divide by CMR. Total fixed cost divided by contribution weighted is weighted. Bring it down. Weighted divided by weighted contribution margin ratio. Please, this is the point of confusion. Understand this. It's not difficult. Once you understand mix, so we're going to see this application in one of the questions. So, but you must be able to interpret all this for you to navigate well. So this is the determination of the overall break-even point in sales value. So you can be asked, when you get the break-even point in sales value and you want to get the break-even for each of the products, it's just for you to apply the ratio of your sales. So it's just for you to apply the ratios of your sales, then you'll be able to compute that or determine that based on units. So due to time constraints, let's quickly look at the question. One of the questions I forwarded yesterday. What is the question? Let's see the question. The question on Abayomi PLC. Abayomi PLC. The question on Abayomi PLC. Somebody is asking, how do we determine sales mix? Your sales in units, the ratio. Then you look for the weight. You're going to see that in this example. Abayomi PLC. Let me locate the question. If you have it, one of the co-hosts, if you have it, you can read. As I try to bring up the question. The co-host, are you with me?
Yes, sir. Abayomi PLC produce and sell two major products, A and B. The budgeted income statement for the year to December 31st, 2022 is given below. Product A and B sales 8,400 for product A, B 25,200. Production costs, we have material, direct labor, variable overhead, fixed overhead. We have gross profit, fixed and selling, I don't know. Then net profit before tax, the budgeted sales, the budgeted selling price of the product for product A, 120, for product B, 180. Require, determine the break-even sales in units for each of the products using the budgeted data. Now, assume that the following changes are made to the budget. Sales unit selling price of product B is reduced to 160. Direct material cost is expected to drop by 10% for product A, 20% for product B. Direct labor costs for each product will increase by 10%. Additional 456,000 will be spent on advertising. 80% of total revenue will be derived from product B. B. Calculate how much sales revenue must be made to earn an after-tax rate of return of 12% of the revenue, assuming tax rate of 40%. Assuming all the products in BI to V above, assuming all the facts in BI and V above, but with the original budgeted revenue of 33,600,000, compute the reverse break-even sales in units for each of the products.
All right, thank you very much. So looking at this question now, that first we are to determine the break-even sales in units for each of the products. For each of the products using the budgeted data. Using the budgeted data. The break-even point for each of the units using the budgeted data. Now, the formula to solve for break is what? Since we want to get the break-even point doing the example, though I know there are different approaches, is to quickly determine the break-even point for A, for B. But there is something here. There is something that is holding these two products together, which is the fixed selling and admin. Do you know the portion that belongs to A? Do you know the portion that belongs to B? There is no information regarding that. So it will not enable you to have a perfect answer when you try to say selling price minus variable cost for A, selling price for B minus variable cost for B. You won't have the appropriate answer when you try to solve in that line, because you're not giving the ratio to apportion between A and B for fixed selling and administrative expenses. That is not given. So you need to work this as a whole. So now, to work based on this, let's see how we can solve this. So everybody should have the, because I'm leaving the question points now. So solution. The company name is Abayomi. Let's see. Abayomi PLC. Solution. Abayomi PLC. When you're writing in the exam, you write well. Your headings are very important. The presentation is very key to the success too. So A, to determine break-even points. To determine break-even points in units based on multi-products. Based on multi-products, what do we do? The formula is what? Who can help me with the formula? If you followed well. Yes, the mic is on. The formula is what?
Total physical overweighted PLM.
Total fixed cost over contribution.
Just contribution.
Weighted contribution.
Contribution ratio.
Fixed cost
Contribution margin
divided
ratio.
by contribution margin.
When you're
Divided by
solving,
contribution margin.
all right. When you're solving for multi-products, more than one product, it will be break-even points in units now. In units will be what? Will be fixed cost divided by weighted contribution. Weighted contribution. Weighted contribution. Now, the question now is, from your question, what is your total fixed cost? What is your total fixed cost? From the question, let's determine that fixed cost. Check your question. What is your total fixed cost? Fixed cost. Fixed cost. We have for A, check your question. For A, let me share the question again. So for A, yes. So for A now, the fixed cost for A, see it, fixed overhead is 560. Is 560. For B is 1,680. When you add, you have 2,240. Which other fixed element do we have? We have fixed selling and admin. Okay, I can see your responses. Yes, we have fixed selling and admin. Is also a fixed element, fixed cost element. So you need to add this 2,240 plus 8,320 to give you your total fixed cost. That is when you are solving for A. That will be your total fixed cost. Your total fixed cost. So now, in your book, you write it that way. The fixed cost will be 560 plus 1,000 to avoid confusion. 560 plus 1,680, you have what? 2,240. Now, for fixed selling and admin expenses, you have the value to be what? 8,320,000. So let me just leave it as 8,320. So the total fixed cost will be what? Total fixed cost will be what? Will be 10,560. 10,560. Now, we need to determine our weighted contribution per unit. Weighted contribution per unit. From the formula we presented, we said weighted contribution per unit is what? How do we determine that? How do we determine weighted contribution per unit? The co-hosts, the mic is on for everybody. How do we determine that? What is the formula?
Good morning.
Good morning.
I think we'll look for the total units of product that was sold by each of the product, both A and B, by dividing the total sales with the selling price per unit for each of them. We now ascertain the total units that was sold by each of the products. From then we can now apportion them with ratio based on their unit of sales.
All right. Thank you very much. So that is it. So let's see that practically. Of course, like seeing it in practical rather than in expression in words of mouth. So, weighted contribution per unit. Weighted contribution per unit is what? Is the sales mix in units multiplied by contribution margin. So also, for you to know the sales mix in units, what will you do? What will you do to know the sales mix in units? We have two products. We have product A, and we have product B. Product B. Now, the sales value of product A is what? Because we are not giving the units in the question. If you check, you are not giving the units. So you need to determine the units. You need to determine the units. How do you determine the units? This is the sales for A, 8,400. For B, 25,200. Well, you are giving the budgeted selling price of the product. So how many units will you sell to get this sales value? It will be 8,400 divided by 120. You will know the number of units, you understand, to sell to make this value of sales. Now, for B, the sales is what? 25,200, but you don't know the units, but you're giving the selling price. How do you know the units? It is sales 25,200 divided by 180. You will know the total unit. You know the total unit. So, and this is it for product A. The sales we said is 8,400. When you divide by 120, you have, sorry, let me just work based on the overall value, please. It was suspended earlier on. I think I will correct my workings by adding the triple zeros. So that will just work in a better way. So 8,400,000 divided by 120 will give you the units, and the unit should be 70,000. Now for B,
Hello, sir. We are not seeing.
okay, sorry, I didn't change my slide. So for B, it will be
your screen.
okay. Sorry, I'm back now. The for B, it is 25,200 divided by 180. So the unit will be what? Will be 140,000. Will be 140,000. So to get the weight now, the total is what? Total. The total sales value is what? Is 33,600. Now, in units, the total is what? 210. 210. So what is the ratio of product A to the total? The ratio of product A, of units A to the total, ratio. Okay. The ratio will be what? 70 divided by 210. You have what as ratio? Hello, can you hear me? All right. So what will be the ratio now? The ratio will be what? Will be 1. How do you determine that? Can I get somebody to speak to that? How do you determine that? How do you determine that? Yes, the mic is on for everybody.
70,000 divided by 210,000.
Okay. Then you have what, sir?
They have it as ratio 1.
Ratio 1. Then for B,
Excuse me.
for B is what?
70,000 divided by 210. Can be
Please.
1 now. Cannot be
That's
That
one.
not
would
one. It's 0.33.
Exactly. It's 0.33. I don't know how they got one.
Can be 1 now.
So the ratio for A will be 1 and for B will be 2. When we
How?
join it, it's going to be 1 for products A and B for products B. Are we 2 for products B? Because we have 210. And total unit is 210. We have 70,000 for products A and products B, we have 140,000. So it means that we can only see 170,000 for products A and 270,000 for products B. That's how we got 140,000.
I
Does it
think
mean
is not, we are not
Hello,
using
sir.
210,000 at this point in time. It's just
Hello.
70 divided by 140. So we have 1 ratio 2.
Hello.
yes.
70 divided by 140 is 1 ratio.
Sorry. It's 1 to 3 and ratio 2 to 3 so that it won't confuse people.
Hello. Good morning, sir.
Good morning.
Sorry, please can I explain how that's okay? I think I understand how the ratio is 1 and 2 that we are saying. Because if you divide 70,000 by 210, you are supposed to get 1/3. And in total, when we see by the time you compute both of them is 3 in all you are getting. If you do 140,000 divided by 210, you have 2/3. So 1 plus 2 is the same thing as saying 3 is 3. So 1/3, 2/3. By the time you add both of them, it forms 1.
So this is it. Let me remove this first. This is it. Yes, everybody have, yes. That is the right thing you've all said. Now, comparing A to B. Comparing A to B. Now, when you divide 70 in relation to 140, it will be what? 70 here, 1. 70 in 140 is what?
2.
It's 2.
2.
So now, the ratio, if you want to express it, it will be 1 ratio what? Ratio what? 2. Then the total will be what? 1 plus 2 is what? Is 3. So that is the ratio. That is the ratio. So now to forge ahead, what we're trying to do is to get the weight. Please, can you put your question on the chat box? To get the weighted contribution per unit. To get the weighted contribution per unit. What we've determined here is the ratio. Now, the first thing we are to do is to move ahead to get the weighted contribution per unit. The weighted contribution per unit. Or the contribution per unit. Let me put it that way, yes. To get the contribution per unit. Then we now arrive at our weighted contribution per unit. So the contribution per unit will be what? For each of the products. Now we have for product A, we have for product B. So the contribution per unit is what? Is selling price less variable cost. Selling price less what? Variable cost. Now going to the question. Do you have the selling price now? Is selling price per unit. Selling price per unit less variable cost per unit. Somebody said he's lost at the ratio at the point of this is it.
Good morning. Good morning, sir.
Good morning.
Sorry to come in. It's like so many people are lost concerning that ratio. So I'm suggesting, won't it be better if we just put it for them 70 over 210 for A, 140 over 210 for B, so that and at the end of it, still the same thing.
Some of them are not actually doing it right. They are getting 0.33. So that is why for simple ratios, ratio is the relationship between one product and the other. So the relationship between products A and B is what? So anyway, let me just present it that way. So this is 210. This is 210. Okay, is that 210? 70 plus 140 is what?
210.
210. Because somebody is asking, how did you get 210? So now, 70 divided by 210 will give you what? Because that will be more confusing to people that don't understand ratio. Yes, to be more confusing. Yes, to be more confusing to them. Because when you do it this way, this will be one ratio. It will not work that way. Rather, so, Madam Dolapo, can you express yourself in relation to this? Because they will get confused.
Okay, sir. From what we are looking for is sales mix. And sales mix is the products, the individual products divided by the total total product sold by the company. So if for them not to get confused the more, because it's not everybody that will know that ratio. So many people are confused about ratio. That was why I said, if you say for product A, will be individual product sold by product A, which is 70,000, divided by the total product that is being sold by the company, which is 210. It will give us the percentage of their sales mix of product A. And we do that the same way for product B. 140, which is for product B, divided by 210. It will give us the sales mix. At the end of the day, product A will be 1/3, product B will be 2/3. If you express it, if you pronounce it in your calculator, it will take you back to decimal. So everything we are still saying the same thing. Thank you.
Thank you. So those of us getting 0.33, 0. This is still same expression. It's still same expression. 1/3, 2/3 in decimal will give you those values you have there. So now to get our contribution per unit, to get our contribution, yeah, the selling price per unit. The selling price per unit. From the question, let's go and show it. The selling price per unit is what? For A is 120. For B is what? Is 180. For A is 120. For B is 180. Now, contribution is what? Selling price less variable cost. What are the variable costs in this question? We have materials, we have direct labor, and we have variable overhead. But they are not given to us in units. They are not given to us in units. Take notes. So now, for you to get material per unit, what are you going to do? A cost of material per unit. What are you going to do? It will be what? 2,240 divided by what? Or 2,240,000 divided by what? How many units did you produce for product A? It will be 2,240 divided by 70,000 by 70,000. And for you to get direct labor rate per unit, it will be what? 1,120 divided by 70,000 for 1 unit. For overhead, for 1 unit, it will be 1,120 divided by what? 70. You get the value for 1 unit. And for B, likewise, for you to get the value of material for 1 unit, it will be 5,040 divided by what? How many units did you produce? For B is 140. Is 140. So
Now,
5,000.
please, we are not seeing your working screen. It's only the
No,
question.
I'm not working now. I'm not working. Yes, I'm just showing you, because if I should go to the workings and you are not seeing the question side by side, you get more confused. So let me show you the question. How do we arrive at per unit? It's 5,040 divided by the number of units produced for B. For direct labor, same. For variable overhead, same. So let me go back and show it now. So I might not really show that my workings again. So you're expected to, I'll just go straight by saying selling price. Selling price for A is what is given in the question as 120. For B is 180. Now, the variable cost now, the total. But let me just show the workings here. Let me show the workings. If not, workings. For material, it will be what? 2,240 divided by what? By 70. You should have 32. That is for products. For A. For B, labor. it will be what? 1,120 divided by 70. You should have what? You should have 16. For variable overhead, it will be 1,120 divided by 70. You should have 16. Now for B, for product B, material will be 5,040 divided by the quantity produced is 140. You have it as what? 36. And for labor, it will be what? 3,360 divided by what? 140. The result will be what? 24. And for variable overhead, it will be what? 2,240 divided by what? 140. The result will be what? Will be 16. So in total for product A, the variable overhead is what? Variable overhead is what? The
32.
cohort should be 64, right?
Total. Okay, sorry. 64.
And for B,
64.
it's 76. So what will be the contribution? Selling price minus variable cost.
56 and 104.
So we have its
So here,
contribution. Contribution, this will be what? 56, and this will be what? 104.
104.
So this is the contribution per unit. Per unit. Now, we're trying to get our weighted contribution now. Weighted contribution per unit. And from the formula, we said weighted contribution per unit is what? Is sales mix in units multiplied by contribution per unit. The sales mix is this. The sales mix is this. This ratio now. This ratio. The sales mix. So for you to get the weighted contribution per unit, it will be for product A. What is the sales mix? What is the ratio for product A? It's 1/3. 1/3. That is in relation to the total. So the sales mix for product A will be what? Let's show it as 1 divided by 3 multiplied by what? 56. For B, it will be what? It will be 2 divided by 3 multiplied by what? By 104. Multiplied by 104. So what would be the weighted contribution margin or weighted contribution per unit for both products? You add everything. You add the result for both products. So what will be the results?
88.
The weighted contribution will be 88. 88. So what are we driving at? We want to determine our break-even point in units based on multi-products. And we said the formula is what? Fixed cost divided by weighted contribution. Now, since we've determined our weighted contribution, the weighted contribution is 88. So we can now determine our break-even point. Our break-even point for the overall or the break-even unit now for the overall product for both products. For both products. So the break-even point in units will be what? Break-even point in units will be what? The formula is what? Fixed cost divided by what? Weighted contribution. So The fixed cost we solved for is what? The fixed cost we solved for is what? Okay, I said I'm going to adjust this by adding zeros. So the fixed cost we solved for is 10,560,000. So we have it as 10,560,000. Now the weighted contribution per unit is what? Is what? Is 88. 88. So the result will now be what? The break-even point in units will be what?
120.
120,000 units. 120,000 units. Now, this is the combined break-even point. These 120,000 units consist of both product A and product B. Now, if you want to know the fraction of product A in this 120, what will you do? This 120,000 units is a combination of product A and B. So for you to know what is the fraction, the percentage of product A in 120, what will you do?
For here, it will be 1/3 times 120.
So for A now, so based on sales mix, it will be based on sales mix, we have A will be equal to what? 1 divided by 3 multiplied by what? 120. And the result will be what? For B, based on sales mix, it will be what? 2 divided by 3 multiplied by what? 120,000. And the result will be what? This should be 40,000 units. 40,000 units. And this should be 80,000 units. 80,000 units. So this is the break even in units. This is a break even in units. Overall is 120. Based on the sales mix, the number of units sold to break even for product A is 40,000 units, for product B is 80,000 units. Hope everybody is fine to this point. All right. So let's look at the B part of the question. The B part of the question. You have to interpret yourself now. Because if you can't interpret, there will be issues. And I don't want, you have to be able to interpret this. Because you see things like this in these exams. Yes. Now, the B part is this. You can see it's very confusing that the A that determine the break-even sales in unit for each product. Now, they are now bringing all these stories. If you don't know, somebody will go to the exam hall and be using these stories to solve for A. You use these whole stories, which is not so. The question is, now assume that the following changes are made to the budget. Unit selling price of product B is reduced to what? 160. Originally it was what? Originally it was what? The unit selling price 180. It has been reduced to what? 160. It means if you want to solve now, you will solve for product A, for product B using 160, not 180. that direct material cost is expected to drop by 10% for product A and 20% for product B. Now, the implication of this is that what direct material for product A originally cost what 2,240. Let me put it that way, 2,240. Now, if it is to be reduced by 10%, yes, to be reduced by 10%, what will happen? To be 2,240 multiplied by 10%, the result should be 224. So you less 224 from 2,240, and you should have what? You should have 2016 years. Now, take note, that is still in terms of money. So for you to get the value per unit, that is still overall, that is still in terms of the budget. To get it based on standard, based on unit, it will be what? 2016 divided by what? 70. Then you get the value for direct material cost for product A for 1 unit. And for product B, same likewise, that it is to be reduced by what? 20%. So originally it costs 5,040 to be reduced by 20%. 20% of 5,040 is what? Should give us 1008. So 1008, when you less from 5,040, you have what? You have 4,032. So that will be the revised value for direct material, and for direct labor cost for each product will increase by 10%. It means 1.1 multiplied by the value of direct labor cost for A and for B. The new value is what you have to use to compute. Also, additional 456,000 will be spent on advertising. I would like to ask a question at this point. This value of 456,000, is it fixed or variable? Is it fixed or variable? Okay,
Fixed.
it's fixed. Why is it fixed? Yes, why is it fixed?
Because it is constant.
Okay, because it is constant. All right.
Because it is something that the company it will help the company promoting their products. It's something
Okay.
they have to do.
It's not affected by the unit, the total unit produced.
All right.
The fixed cost is for both products.
Okay, fine. Okay. All right, thank you very much. So it is relatively fixed. It can be fixed for 1 to like 3 or 5 years. After some time, it can change. So it is fixed, relatively fixed. Let's put it that way. Because with changes in economic situation, the costs can still increase, but it is not something that change based on the unit. Does not change frequently, so it is relatively fixed. Now, let's still look at this point 5, that 80% of total revenue will be derived from product B. What is this pointing at? 80% of total revenue will be derived from product B. What is the interpretation of this? That 80% of total revenue will be derived from product B. What is
Hello, sir.
all right?
Okay, what this place is trying to tell us is all the revenues that will be coming in for the company, product B will have 80, the revenue for product B will stand at 80%, while 20% will come from product A. 20% of product A. It means product B will generate the higher percentage of the revenue that will be coming for that period.
Okay. All right. Okay, I can see from the chat box, I can see sales mix The ratio will change. Okay, fine. Yes. So this now, they're already telling us that the sales mix now, the ratio of sales for product B is 80% out of the overall revenue. And for product A will be what? 20%. So it means that they've already given us the weight. This is the weight now. The weight for product B is 80%. For product A will be 20%. Somebody will ask me, how did we get 20%? 100% is overall. If a fragment of 100% is 80%, what is the balance which belongs to the other product? That is why I'm saying product A, the weight of it in the revenue, overall revenue will be 20%. So now, when you adjust for all this, they are now telling us that we should do something. Calculate how much sales revenue must be made to earn an after-tax rate of return of 12% of the revenue. Assume tax rate of 40%. Assume tax rate of 40%. We've presented the formula for this before now. That's when we are asked to compute for break-even point. That is where we have the profit after tax, and we have 1 minus our tax rate divided by our contribution margin ratio. So let's see what to do in this regard now. So let's see what to do. So B, the unit selling price for A will be what? Let me just write the whole unit selling price for product A still remains 120. For product B, that is going to reduce, right? To what? To 160. Take note of that. Direct material for A, that is going to reduce by what? 10%. So you can decide to solve this way if you want. 240 multiplied by 10%. The result will be what? The result will be 224. So it means that for you to know the reduction now, it will be 2240 minus 224. The new value will be what? Will be 2016, right? Now, this is the budgeted. For 1 unit, it will be what? 70. 2016 divided by 70. I believe you know where 70 is coming from. 70,000 units is for what? For product A, what we actually were able to sell for product A. So now, what will be the unit cost for direct material for product A? The unit cost will be what? Should be 28.8. For B, you do say direct material for B, it should be what? It will be 5,040. That it will reduce by what? By 20%. So 20. This will give us what? This should be 1008. 1008. The reduction will now be what? Will be 5,040 minus what? I'm just taking my time to show this. If not, I could have just skipped it. But in order not to have too many
40,
questions.
32. 40,
Right.
32.
So we have it as 4032 divided by what? The total unit produced for B is what? Is
140.
140,000. So once you divide, you're going to have what? You're going to have what as the new value? The result will be what?
28.8.
In the exam hall, don't begin to think you are wrong. You know, some people will say, why will this thing be the same? Hope I'm doing the right thing. Just work, solve based on what you understand. Even when the values are looking same, continue solving. Follow what you know. Because some people will just put their hand in their head and say, am I sure I'm correct? When the result is at this point. So please, can you put your question in the chat box if it's related to what we are discussing? So for labor, for direct labor, for A, it will be cost is what? What is the question saying in relation to labor?
Increase by 10%.
It will increase by 10%.
To increase by 10%. Yes. To increase by 10%. So what is the current value of labor?
112.
The current value of labor is, based on the question, 112, 1,120. Okay. 1,120. That it will increase by what? 10%, right?
Yes, sir.
Yes,
So
sir.
by 10%, I will just do, to me, instead of following this approach up, I will do 1.1. The result will be what, please?
1,232.
Yes, do what you know. Do how you know how to work based on how you can get the increase, please. So don't get confused in the whole. You know, some people will first do 10% of this, the way I've done here, 10% of this, they will not get it, they will not add it to 1,120. Since this is increase, I will just work directly. So it will be 1,232 divided by what? 70. I will get the unit value, and that will be what? 17.6. Again, this somebody is asking, are we not supposed to get the unit value for B? The unit value for B is there. So somebody can respond to the person on the chat box too. For B, it's equal to the original value of labor is what? From the question for B, 3,000.
3360.
So when it increases by 10%, it will be what? That is
3,196.
right. 3360. 60 multiplied by 1.1. So we have it as what? 36.
96.
3696. To get it for 1 unit, this will be what? Divided by 140. We have it as
26.4.
26.4. So at this point now, the variable overhead, is it affected? Any information about variable overhead? Variable overhead. It will be affected because the price for product B has changed, right?
Yes.
The price for product B has changed. So it will be affected. it will be affected. So now, what will happen here? For products, for variable overhead, for variable overhead, it will be what? For product A, variable overhead for product A, what will happen here? 1,120. 1,120 divided by 70 will give us yes, for product A, the variable
16.
overhead
16.
will be 16. How do you get that?
1,120 divided by 70.
Divide by 70. Now for product B, what will happen?
It will still be the same thing, sir, because it's still the unit of production. It's not the price that changes.
Yes, is so it's still same value for variable overhead. So we have it as for product A, we just divide. We divide the values. So we have it as 1,120 divided by what? This will be divided by 70. We have what? We have 16 as we will solve for in the first part. For B, we have it as what? This will be what? 2,240 divided by what? 140. And this will give us 16. This will give us 16. So now, to get for the contribution per unit, to solve for the contribution per unit, the contribution per unit, it will be contribution per unit. So we have product A, we have product B. The selling price is what? For product A, is 120. For product B, it has reduced to 160. Now the direct material, for product A will be 28.8. We'll solve for all this. This will be 28.8. And for direct labor, it will be what? It's 17.6. And for B, it's 26.4. And for variable overhead is going to be what? 16.
16.
This will be 16. So you have to less everything. 120 minus 28.8 less 17.6 less 16. The result will be what?
57.6.
The result will be 57.6. For B, it will be what? For B, it will be what? Is
88.8.
It's 8.8.
contribution per unit is 88.8. Now, from the question, what do we want to determine? that calculate how much sales revenue must be made to earn an after-tax rate return of 12%. Now, we're trying to get to calculate the sales revenue now. The sales revenue that must be made to earn an after-tax rate. Since this is revenue, our contribution margin will be what? Will it be contribution margin or contribution margin ratio?
Contribution margin ratio.
Contribution margin ratio.
Margin ratio.
It's contribution margin ratio. So to get our contribution margin ratio, what are we going to do? Contribution margin ratio is what? Selling price minus variable cost divided by selling price. Now, since selling price minus variable cost is contribution, it means we'll still divide by the selling price. So to get the contribution margin ratio here, to be 57.6 divided by what? The selling price. You have the contribution margin ratio here to be what? 0.48. And for B, it will be 88.8 divided by what? The selling price is what? 160. It will be what?
0.56.
Let's leave it at 0.55 since we don't have much issues of approximation. So now we need to get, this is based on individual contribution margin. What will be the weighted contribution margin ratio? What will be the weighted now? The weight. The weight. Yes, I need somebody to speak to this now. I said something about, there was an highlight in the question about revenue. About revenue. So based on that, can you link that to this? What would be the weighted contribution margin ratio?
Hello, sir.
Yes, sir.
The weighted contribution margin ratio will be 80% of the total revenue derived from product B.
Okay. 80% of the total revenue. Yes, that is interpretation of that. But looking at it means that the weight of the total revenue, 80% belongs to what? To B.
So it will be 20% of the total revenue, 20% of product A. That will be 0.2 times the weighted and the CMR, which is 0.48 plus 0.8 times for product B. So now be 0.8 times 0.555.
Yes. So instead of solving for the weight now, they've given us the weight of 80%. That 80% revenue accrues from product B and 20% accrues from product A. Though they didn't state 20% in the question. But based on percentage, you know that the balance will be for the other product. So the weighted contribution margin ratio will be what? For product A, it will be 20% is 0.2 multiplied by 0.48 plus 0.8 multiplied by what? 0.55. So when you punch your calculator, the result will be what?
The result will be 0.54.
0.54. So this is the weighted contribution margin ratio. Why are we using weighted contribution margin ratio? Because we want to determine the sales, the combined sales revenue to be derived. Now, having done this, the question now is, what will now be our total fixed cost? Our total fixed cost will be what? The total fixed cost will be what? There's an addition based on the additional information.
Mm.
There is an addition based on the additional information. And what is that addition? The existing fixed cost is what? The existing fixed cost. We have
10 million 560.
Yes, the existing fixed cost. The existing, we have 456,000 plus what? Plus 2,240 or 2,240,000. Then the new addition, which is the advertising. Or am I getting, let me see, on the question. Sorry, the addition is 456. So the existing is 2,240,000 and 8,320,000. The addition is the advertising expenses, advertising cost, which is 456,000 plus 2,240,000 plus 8,320,000. So the total will be what?
11 million 16,000.
11
Mr.
million.
Tokwe,
Yes, sir.
please, sir, and there's an observation. The weighted contribution margin ratio. You said 0.2 times 0.48 plus 0.8 times 0.555. If we add the two together, we are not going to arrive at 0. Or which one is it? I don't understand that side. It seems we didn't get it right, sir. Sorry.
It's
Okay.
actually correct.
It's
Anybody
correct.
confirm this?
It's correct,
It's
so
zero.
it's correct.
The first one is
Hear me.
0.2 times
0.096.
0.48 is 0.096.
Okay. Thank you.
Mr. Sunday, just punch your calculator very well. 0.2 times
Okay.
0.40. You now say plus, and you do the other
Okay,
one.
Madam.
It will give you
I will work on it. Thank you, Madam.
All right. Thank you for confirming that it is not wrong. So the fixed cost is 11,016,000. 11,016,000. So what is the formula to determine? There's a question. The formula to determine, to calculate how much sales revenue must be earned to earn an after-tax rate of return of 12% of the revenue. Assume tax rate of 40%. So assume tax rate of 40%. So what formula are we going to use now? What formula are we going to use?
It's fixed cost plus tax minus tax rate.
Yes. So it's fixed cost. This is it. Fixed cost. The profit after tax. This we want to derive, or that formula is what we're going to be using to solve for this. Fixed cost, the profit after tax, divided by 1 minus tax rate, divided by contribution margin, divided by contribution margin. So if we are working based on units, okay, this should be contribution margin ratio. Yes, contribution margin ratio based on what we've solved for. So we're going to be using this formula. So we're going to use this formula. Let me copy it. So from what we've solved, the fixed cost is what? The fixed cost is what?
Fixed cost is 1,106,000. 0,16,000 rather.
11016,000. Now, do we have profit after tax? Is there any information related to, well, let me just put something. We are trying to determine our sales revenue. Let's make that to be, because it's unknown, let's make that to be our X. That is what we're trying to determine. Trying to determine sales revenue, determination of sales revenue. Determination of sales revenue. So, do we have any information related to profit after tax?
Our profit after
No,
tax
we only
is
have
12%
profit
of
before
X.
tax.
Profit before tax.
We have.
Okay, what is that information?
He said after tax rate of return of 12% of the revenue.
Yes, after tax rate of 12% of the revenue. So this after tax rate of 12% of the revenue, profit after tax, it means that the after tax rate will be what? 12%. So the 12% of revenue will represent revenue as X. Take note, please. Revenue, this X here is signifying revenue. Now, profit after tax will be on the revenue. So what is that tax element? It will be what?
12% of X.
12%
of X.
Of X. Yes.
And
12% of X. If you look at maybe what they've solved in the
Can we 0.12x simplification? I don't know if I'm right.
all right, so we're coming there. So the tax rate is what from the question?
40%.
40%.
So that would be 0.6 divided by 0.6.
1 minus 4. I don't just want to put 0.6 to bring too many questions. So now, the contribution margin ratio with sulfur is what?
0.54.
So when you simplify all this, it will be what? 0.54. When you must be very careful to punch your calculator. If not, you give me wrong answer.
Excuse me, sir, I want to ask a question.
What is the question?
This 12x is not supposed to be 0.12x.
Okay, yes, that is 12%. Yes, 12%. Yeah. So let me place it 12% here, 0.12x, yes. So you can just let's place it that way for easy. So can you just compute what will be the value of X?
The value of X will be
32,400,000. But that is if we collect lifetimes and
yes, that is
okay.
32,400.
All right, let me still show something here because people will be confused. So you can actually do this. This X divide by 1. So that when you collect lifetimes, 0.54 multiplied by X will be 0.54x equal to, then when you simplify the numerator, it will be what? 11,016 plus what?
0.2. 0.2x.
0.2.
Because we have 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12% 12 12 divided by 0.4.
0.2x. So when you collect like times, what will happen?
0.54x minus
Minus
0.2x.
0.2x.
You know, when these two
I'm so
plus
sorry,
2,
0.2x from 0.12. Sorry, please.
all right. So when 0.2 cross this equal sign, it changed to what?
Minus.
Minus.
So why are we bringing 0.2s to 0.54s? Because they look alike. They have one common factor, which is x. So this will be 0.54x minus 0.2x. So when you solve, the result here will be what? 0.54x minus 0.2x.
0.34 x.
0.34x. You divide both sides by 0.34 to get the sales, the revenue. X will be what?
3242 32,400,000.
32,400,000. 32,400,000. So this is the total revenue. This is the total revenue.
I'm sorry, sir. Please, I don't know how from 0.12x we now got 0.2x.
That's 1 minus 0.4.
On your calculator, 0.12 divided by 0.6. You have what? So now this is the revenue. Now, this is the total revenue. What fraction of this revenue belong to product A?
20.
That is 20%
Thanks.
of 32,400. The result will be what?
3.240.
6,480,000.
6 million. Okay.
And this will be 8.
Yes, that's not very good.
So this should be 6,480,000. And this should be what? 25,920. So this is the split of the revenue, this total revenue. So the question is telling us to do what? That calculate how much sales revenue must be made. And this, what we've done now is the sales revenue that must be made to earn an after-tax rate of return of 12% of the revenue, as on tax rate is 40%. So that is what we've solved for. Somebody will say, and this is what they want us to solve within few hours. Yes. So can I get the questions? People that are raising up their hands.
Sir, please, I got lost at some point after the first stage.
That is serious.
Please
After the
attend
first,
to the question in the chat box, please.
after the first page. Let me see what is in the chat box. How did we get variable overhead? Since the unit price of product B was reduced to 160, why are we still using the unit quantity of 140, which was arrived at when the unit sales price was 180? if you look at the question, let me respond to Priest's question. That now assume that the following changes are made to the budget. Assume that the following changes are made to the budget. The quantity still remains same. The quantity still remains same. The only thing that changes is the selling price for B. Is the selling price for B. So there is no any information regarding the fact that I understand your point of view that we actually determine our units by dividing our selling price for A. That is 8,400 divided by 120, 2,500 divided by 180. Yes, that is how we determine our units. Yes, at point A. Now at point B, when the price now changes. So it's now trying to say, why are we not dividing 160 by 25,200 to get a new quantity? Now this is it. This is our budget. We are working based on our budget. Now the budget is still 140 in terms of units. The budget is still 140 in terms of units, but the price now changes. The price changes. So the price change is not affecting the budget, the standard that we plan to produce. Yes, the standard is the budget. That is why, yes, as I was looking at this question, I want to place emphasis on this, that the budgeted income is this. This is the budgeted, that is based on overall. If it is standard cost to be based on a unit, so the budgeted is this. This is the standard, and that is why that unit of 140 for B is not changing despite the change in the price of 160. Yes, because the plan is to produce 140. That is the standard, but the reality changes. So it does not alter the 140 that we have there. So that is.
Please, so can I ask?
Yes, can speak on, please.
What the examiner, they are just looking at in another scenario whereby they still produce that 140 and they reduce their selling price and there's some variable overhead reduces and some increases. Will they still make profits? Whenever we are treating question, we have to look at what the examiner required of us. Because even when I saw the question initially, I was like, since it was 140 that 180 that arrived at that. But when I look at the question again, what they are trying to say is if they still produce that 140 and reduce their price, will they still make profit? So that's what they are looking at. They are not looking that 160 does not affect the quantity of output that they make.
All right, thank you very much for that. So the other part of the question, the last part of the question, that's assuming all the facts in B1 to 5 above, but with the original budgeted revenue of 33,600, compute the revised break-even sales in units for each of the products. That we should compute the revised break-even sales in units for each of the products. By we assuming that the revenue is 33,600,000. So to compute this, is computation of revised break-even sales. Computation of revised break-even sales, assuming that the revenue is 33,600,000. Now, the first thing we must do is the revenue mix is what? And what is that revenue? Let's see, this is the original revenue. Original revenue is 33,600,000. Now, for us to determine the revised break-even sales, the revenue mix of this 33,600,000 is what? What is the portion of product A and the portion of product B based on the B part computed? Still working based on that revenue mix.
For A, 20%, and for B,
Revenue
80%.
mix for A is equal to 20%. 20% of 33,600,000 will give us what? For B, it will be what? 80%. Multiply by 3,600,000. So we have it as what? For this should be 6,720,000. For this should be 26,880,000. 26,880,000. Now, the selling price per unit is what? The selling price, this is the revenue for each product A and B. The selling price per unit is what? Based on the revised, based on the adjusted price. The selling price for A still remains same as 120. Selling price for product A is still what? Still 120. And the selling price for B is now what? Is now 160. So let me now ask a question. How many units? How many units are we going to produce for product A in relation to this revenue? Or how many units are we going to sell? Yes, for product A in relation to this revenue. If the selling price for A is 120 and the revenue for A is 6 million, okay. Okay, fine. I'm getting 56 years. All right. Yes. So it means for product A, quantity to be equal to what? 6,720,000 divided by what? divided by 120, you have 56. You have 56,000. And quantity for B, it will be what? It will be 26,880 divided by what? Divided by 160. And the result will be what? 168,000. So the total units will be what? Total units will be what? The total units should be 224,000. So at this point, I want to ask a question. Yes, 224. What will be the sales mix based on the units produced? What will be the sales mix based on the units produced? Sales mix based on units will be what? Yes, can I get a response? Sales mixed based on units.
For product A, you have 25%.
Okay.
That's the total quantity for product A divided by the total units.
All right. And for product B,
Product B. For product B, 75%.
okay, for product B is 75%. So we have it as sales mix based on units. For product A, it will be 56,000 divided by what? 224,000. You multiply that by 100 once, you have it as 0.25. And for B, for product B, it will be what? 168,000 divided by 224,000. You multiply this by 100, you should have what? 0.75. Should have 0.75. Where are we driving at? We are driving at weighted contribution per unit.
Sir,
Yes, ma'am.
if you are multiplying it by 100, it should be 25%, not 0.25 and 0.7.
Okay, 25%. Yes, okay, 25%, right? Directly.
To multiply it by 100, it should be 25%. But if you don't multiply it by 100, it should be 0.25.
0.25. Okay, fine. Let me leave it as this 0.25. So the weighted contribution per unit is what we want to derive. Now, for us to get the weighted contribution per unit, we must know our contribution, and our contribution still remains this. Our contribution still remains this. The contribution per unit is this. So the weighted contribution per unit will be what? Well, first, your contribution will be what? Contribution for A is what? 57.6. And for B is what? Is 88.8. So the weighted contribution now in relation to the sales mix will be what? The weighted contribution per unit in relation to the sales mix will be what? Will be 0.25 multiplied by what? 57.6 plus 0.75 multiplied by what? It's 8.8. So the weighted contribution per unit will be what? The weighted contribution per unit. You said?
81, 81.
81. Okay. 81 is the weighted contribution per unit. 81. Weighted contribution per unit. Now, to determine the break-even cells. What is the question saying? Let's see the question. That's okay. Break-even cells in units. Break-even cells in units. To determine the break-even cells in units. Now, since we have the weighted contribution per unit to be 81, the fixed cost is what? The formula is fixed cost divided by what? Weighted contribution. Weighted contribution. Now, the fixed cost is what? As computed, is 11,016,000. The weighted contribution based on units is what? Is 81. So the break even is what? So the break even point or the break even in units will be what? Will be 136,000 units. 136,000 units. So based on the sales mix, what portion belongs to product A? Based on the sales mix, how many units do we have to sell in relation to product A to break even? To be what? Based on the sales mix, 0.25 multiplied by what? 136,000. And for product B, it will be what? It will be 0.75 multiplied by what? By 136,000. So the result will be what? Okay, 34,000 units for A. And for B, around 2,000 units. So the total will still give us 136,000. So that is what the question wants us to do in relation to what we presented. I know it's a very long one, but please go over it again. Try to solve it on your own again, because A question can be long when you are solving it for the first time, but when you try to solve it again, you can try to reduce the time used will be reduced. Yes, because the first time you're seeing it, learning curve will take place, and you try to solve again. So don't mind the fact that we're taking time to solve this and taking time to show certain things because we are all learning. Yes, by the time you are on your own and you solve these 1, 2, 3 times, you you use less than 25 minutes to quickly solve. Yes. So please try and solve this question again. Solve this particular question again on your own. Yes. And try to interpret the statements. So when you're trying to solve questions in performance management, always read very well. Read if it is standard, if it is budgeted. Follow the instruction. Follow the instruction. Now, one of the first thing for you to pass this exam is your ability to read and adhere to instructions. Yes, you know you can read and not adhere to it. Once you read and you adhere to instructions, that is 2% of the rates that you pass. Then you now follow other things. You can see a question that you've solved before. Don't just jump and be putting down what you've known because you've seen the question before. Read this question. It might look familiar. There can be a little twist. Read very well before trying to attempt the question based on the past questions you've seen and you're trying to solve. There can just be a little twist. So you need to take note of that twist because a question can look very similar, but there can be a little adjustment. Yes, because some examiners will not just repeat question directly. Sometimes they can repeat very well. They can repeat, but there can be a little addition. Can be a little addition to it. So as we approach these exams, the exam is here just in a few days' time. I know there will be some little form of there will be elements of fear. Yes, some people will want to exercise little fear. Yes, it's human nature. Yes, it's human nature. I'll send the slide to the platform. It's human nature. But please try to overcome fear. I don't want to know the number of times you've been writing this paper. All you need to do is all you've known, revise them again. There are some key topics you need to know. Budgeting is one of it. And we'll solve questions on budgeting in different perspectives, looking at production budgets and cash budgets. These are the two areas where questions can come up in relation to budgeting. So if you've not watched the video on cash budgeting, please do well to do that. The question on Ozibodu, yes, where the sales, the purchase values are given monthly, but the examiner wants you to compute annually and get the receivables, the outstanding receivables, outstanding payables is a question that is little bit complicated, but once you understand the concept, you'll be very fine. You'll be very fine. So please, variance is very key. Variance is very key, and it can come in a very simple way, and it can come with some twist. But if you are able to solve questions forwarded on the platform, you'll be fine. You'll be fine. Yes. Just solve. And as you go to the exam hall, anything you know about a question, either theory or calculation, try and follow them and write. As you solve, and the spirit is telling you, am I right? The spirit is telling you you are wrong. Spirit is telling you, am I sure I'm doing the right thing? Just do what your spirit is telling you to do. Right to the end. Right to the end. Yes, don't give up. Some people at the middle of the exam, they can just pack their paper and go and submit. Yes, we've seen such cases. Don't do that. Yes, don't do that. But please learn to take rest, even period to the exams. And you need to eat, even though it's just little tea, because you need strength to write. You need strength to write in that exam hall. Yes, by the time some people that will be writing FR, start for FR the first day, second day, PM, because as you think, you need energy to think. Yes. Yes, based on the slide I'm presenting, it's just to tell you that to achieve a high score in the ICANN performance management examination, you should adopt a strategic approach that includes the following step. Number one, you must understand the exam format. It will be very bad you're in this platform and you've not evaluated the exam structure. You've not taken the past question and see what the past question entails. Maybe you just have the pathfinder, but you have the pathfinder that they are selling, but there is this pathfinder that will tell you the instructions, everything you need to know. Familiarize yourself with the exam format. Question one entails how many marks. The exam is divided into how many sections. You need to know. You need to know that. So, and the topics I've mentioned, budgeting, if you look at the syllabus, they have higher percentage. Yes, if you've not done that, go to the syllabus and check which topics are having the highest percentage, that is the highest workload. Go and check them. And that is a pointer to tell you that these topics are examinable every diet. So if you don't have the syllabus, get it. I think it's online. You can download it, and you'll be fine. So you must know, you must understand the syllabus. If you've not done that, check the syllabus, go and look at it. And I believe we've been solving past questions. Yes, we've been solving past questions. If you've not been doing that, do that, because it will put you in the exam mood. So practice past exam papers to get a feel of the exam formats and types of questions asked, because this will help you identify areas where you need more practice and improvement. So this is very important. I won't be surprised somebody is here, is just planning to go and buy a calculator tomorrow or today. I want to imagine what you've been solving with. You've been borrowing people's calculator without having your own. That is not good enough. You need to master the calculator you want to use in the exam hall, so that in the exam hall you won't be calling the examiner, please, I need calculator. And the examiner is asking other candidates, who is having two calculators, who is having a spare calculator. So performance management exam often involve numerical questions, so make sure you are comfortable with calculation related to budgeting, variance analysis, performance measurement, and other relevant areas. It's very key. It's very key. Now, understand theories and concepts. Yes, that is why I've taken my time to put those theory questions and answers together. Definitely, if you can, do you see theory questions that when you put the marks together, we amount to, like, let's say 15 to 20 marks. If you can do well in the theory questions and put good effort again in the calculation, definitely you will pass. Because I don't want results to come out and we'll be seeing strange scores like 6, 5. Somebody will be saying, is it that I didn't write anything? You understand? So understand theories and concepts, benchmarking, and BCG matrix. Understand them, cow, bull, star, all those concepts of you've learned in CSME is still also in PM, just in time system, all those concepts, casing concepts. So it is not just about calculation. Understand the underlying theories and concepts behind performance management techniques. And this will enable you to apply your knowledge to different scenarios in the exams. So this is very key. On every topic, the concept is what you need. On every topic, the question is, the concept is what you need. You can put your question in the chat box. Now, this is very important. You can be very good, but don't know how to manage your time. Yes, you can be very good and go and spend the whole day on question one, because it's question one is 2 pages, and you are reading the question without being conscious of time, and you are still reading and they are telling you 30 minutes to go, and you get destabilized. So as you step into the hall, or even before going into the hall, I'm putting this thought to you that you should plan how to manage your time as you go to the exam hall. Question 7 will always be very simple. It can even be theory. Because when you start the exam on a very good spirit, it will enhance your ability to answer other questions. But when you go and approach a question, when you put your hand on your head and say, what is this? You see, it can be very disgusting. So practice time management during your preparation. Learn to allocate your time effectively to each question. Section 1 comprises of 1 question. The mark allocation is 30 marks, and it is compulsory. But because it is compulsory does not mean you should start with it. Yes, it is compulsory. Please do well, no matter how complex it is. As they are giving you the statements, writing the statements, bring out your variables from the question, arrange them based on what you think is right, and definitely you get marks from it. Yes, because the question 1 can be a combination of 2 or more topics, but still try and bring out facts from that question. Try and bring out facts, no matter how complex they might put it. Don't leave it undone, please. Yeah, just try, put effort, and read between the lines and see what the question is talking about. Yes, so at least there will be a wall clock. There should be a wall clock in the hall. Yes, they should be mindful that their students are writing exams and they are working with time. So, well, I know they might not allow you with your wristwatch into the hall. So at least allocate 45 minutes to question 1. That is the suggested time allocation. Section 2, we have 3 questions, each comprised of 20 marks. You have to choose any 2 out of these 3 questions. Choose any 2. Don't outmark them and go and say, let me do the whole section 3 because I know them. And come and you follow the instruction. Follow the instruction. Section 2, they will tell you, choose any 2. At least you can allocate 35 minutes per question to section 2. And section 3, we also have 3 questions. Choose any 2. In this section, the question might not be that complex compared to section 1 and 2. So at least you should allocate 25 minutes per question to section 3. So overall, when you solve question section 1, you should use 45 minutes. Section 2, you should use overall 1 hour, 10 minutes. For section 3, overall, you should use what? 50 minutes. So the total time to be used should be 2 hours, 45 minutes. 2 hours, 45 minutes on the 5 questions you have to solve. Then the remaining time, because you have 3 hours, 15 minutes for the whole exam. The reading of the instruction, everything, 3 hours, 15 minutes. So the extra 30 minutes, you should use it to cross-check your work. Write your examination number. The questions answered. Write them. When you do this, you'll be very fine. Yes, you'll be fine. So plan yourself. No matter how your mind is telling you, I've not read, it's a lie. You've read. Till when you see question before you know that, yes, God has been good. Yes. When you see question and the thing begin to pour out, you know that yes. But now the thing will be telling you, am I sure I'm prepared for these exams? Yes. Just do away with that spirit. You've put effort, you've come a long way, and you will not be left down. You will not be the story will not be a different one, it will be a great one. So you've put resources, spent time, money, and everything. So let's God will help us to see that we have good success. So the revision, as the exam approaches, dedicate time to revision, which we've been doing. This will help reinforce your learning and identify any weak areas that need further attention before the actual exams. So we've been doing that. And in this revision class, we've been able to, within the short period, to do certain things that when you add them to your previous learning, it will add up. And the main point is stay calm during the exams. You know, during the exams, you can be so tense. You'll be going to the restroom 100 times. Understand? You are just seeing questions. You are raising up your hand. You are running to. If you know you do get pressed very well, just don't take too much water. Yes. So you need to stay calm. Yes, during the exam. So on the day of the exam, stay calm and focused. If you are the one that likes sleep too much, don't sleep and forget the exams. I have a student last time. He's a friend that saved him. He was sleeping. The guy said, let me call this boy. The guy was still snoring. He quickly ran to the exam hall. So on the day of the exam, stay calm and focused. Read each question carefully and manage your time wisely. So if you encounter a difficult question, don't panic. Move on to easier questions and come back to it later. So this is very important. This is very, just stay calm. Yes, don't be frightened. Now, the ultimate thing is the God factor. Yes, you can do everything. God is key in this. Yes. Because of this exam, don't tell me you are not going to church on Sunday. I know my Muslim brothers will definitely go and pray. Yes. So some people will stay in one sentence and say, exam is this. Go and serve God. Yes. Because He's giving you life to write the exams. So ultimately, while spirituality and faith can play a significant role in individual lives, success in exams typically requires a combination of preparation, effort, and effective study strategies. So it's essential to approach examination with a balanced perspective, recognizing your role while also acknowledging the support that faith and spirituality can provide. So please, let's commit everything to God's hand that He will grant us excellent spirits and the spirit of remembrance, even as we step into the hall. So God will crown our efforts with good success. And I hope to see you in the professional class come next diet, and we'll all be fine. So this will be the end of the revision class for May 2025. If you have any question, you can just send them to the WhatsApp group. And okay, let me just give room for us to talk. One or two persons to just say something. Then let me just end the class on that note. All right. The floor is open.
Sir, good.
Yeah, good morning, sir.
Sorry, that cash budget question you mentioned, is it Ozubudu? I didn't
Yes.
get it.
Oziboduma. Don't mind me.
Ozibudu.
Yes, Ozibudu.
Sir, please, what year is it from?
It's 215, question 2. It's Ozi Wondu. It's an Igbo word.
Okay, Ozi Wondu. Question 2, right?
Yes.
Yes, I know it's an Igbo word, so
What year?
I was being very careful not to bite my tongue.
2015, question 2.
2015. Oh, thank you so much. God bless.
Okay.
All right.
Thank you so much, Mr. Tokwe.
Thank God.
Mr. Topper, we are grateful. God
Yeah,
bless you,
we
sir.
want to thank you.
Hello, sir. Hello, sir.
Yes, ma'am.
Yes, sir. God
Please,
bless
I want
you.
to ask. Good morning, sir. Thank you so much. But please, I want to ask, can we be asked to draw a graph on that time series analysis question?
On that time series analysis, not really per se.
Okay.
Not really, yes.
Okay,
Sir,
sir.
please, I have a question. No, it's under this graph for this. It's in linear programming. If they ask us to draw the graph, I want to go to exam hall with the graph book.
No, the examiner will provide. If they don't have, they will tell you to just draw on your sheet. So the examiners, once you raise your hand up, you tell them what you need. They will attend to you, and you understand. So you don't go to the exam hall with the graph. You don't go with anything, just your writing materials and your calculator. Yes.
Please, so does Apex have a physical presence, or is it just online?
Yes, it's just online. They used to have physical presence in Lagos, but for now, it's just online.
Okay.
Just online. Yes. All right. Thank you very much for your time.
Thank you, sir.
To
We
hear from
appreciate
you. The
Thank
results.
you, sir.
God bless
God bless
you.
you, sir.
Success is yours.
Thank you, Daddy
Thank
Topper.
you,
Thank
Avoid.
you, Daddy Tokwe.
Sir,
God
God
bless
bless
you.
you, sir.
Thank you. Bye.